Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment of Traders review. Today we're going to have a look at the 19th COT report of 2018. But before I go into the COT review, I'd like to tell you that we have two new services out. The first one is futurestradingguides.com, and we've just launched fxtradingguides.com, where we're going to be focusing on forex markets. Please check these out if you haven't yet done so. Back to the review, and starting off with the orange juice market, where we have a 29% change in commercials positions. You can see that on the chart over here. It is a bearish COT change signal, a pretty large one actually, that is suggesting prices may decline early next week. We have been witnessing this rally for quite some time now, so we're going to jump over to the 5-year chart and see how extreme this market has become. And you can see that we are actually increasing the extreme. We are currently at a 57 report extreme in case of commercials and 52 report extreme in case of large speculators. Of course, you can easily see from this 5-year chart that this extreme could become even greater, which means if you're planning on taking a short position in orange juice, which of course you can do so, it's just good to know that the report is indicating the possibility of this extreme to go even to a greater extent, meaning this rally could continue for many more weeks or even months before we see that extreme where we're supposed to be expecting a change in the trend. So the last major extreme was actually bullish, and you can see that it was these extremes, because there was a couple were effective signals and pushing the orange juice market higher. The next market is the Swiss franc, where we have a opposite COT change signal, a bullish one, 28% change in commercials positions, 39 in large speculators. So obviously these are bullish COT change signals suggesting a move upwards in the near term. And if we jump to the 5-year chart, you're going to see we also have a significant bullish COT extreme in the market. 566 report extreme in commercials, 307 report extreme in case of large speculators, and an all-time bullish COT extreme in small speculators positions. So basically all our major COT signals are pointing upwards in case of Swiss franc, which means we can expect the market to turn, and we should see higher prices coming soon, possibly. We'll see that. We can analyze the market and see how the Swiss franc reacted to these bullish COT extreme signals, and you can see it actually acted pretty well to these extremes. So why shouldn't it act the same way now? We'll see about that. Okay, let's move on to the S&P 500, where we have a 23% bullish COT change signal. And as you can see, the market has already gone higher since Tuesday. Obviously, you know that the COT report is indicating a position in time for Tuesday. Jumping to the 5-year chart, you're going to see that this bearish COT extreme with this sudden move in traders' positions has decreased a little bit, but we're definitely still closer to the bearish side of the market. Obviously, you have to look at other indexes and come to a conclusion from analyzing those as well, since these markets correlate significantly with each other, of course. Moving on to large speculator COT extreme, we talked about the Swiss franc. So the next market is the Chicago wheat with a 207 report extreme in large speculators positions. So here you can see that extreme. It's an unquestionable bearish COT extreme that we have. The last one, when we were at similar levels, was back over here in mid-2017, and you can see that correlating with this top over there. Of course, why not expect this to happen again? And you can see that actually this week the market has declined. So maybe this extreme has already taken its effect, and if so, we should be expecting lower prices to come. The next market is the lean hogs with 160 report extreme in large speculators positions. You can see that over there. Large speculators are currently net short, and commercials are the ones who are taking the long side of the market right now. This is a bullish COT extreme situation. This, of course, that you see over here on the chart was most probably a switch in the contract, so roll over basically to the next expiry. So you shouldn't be fooled by that. We may see a sudden rise in the market if this COT Extreme, this bullish COT Extreme signal will take its effect on the market. And last but not least, we have the Oats market with a 67 report extreme in large speculators. Let's open the 5-year chart. Here we go. You can see basically large speculators have gone down below the zero line, meaning they're net short at the moment, together with commercials, which means basically only small speculators are optimistic about the market at the moment. Now, this usually means, well, if only small speculators are long, that it's a good bearish sign, but obviously you have to see this in context with each other, and unquestionably you can state that this is actually more of a bullish COT Extreme situation than bearish. Now, if you look on this 5-year chart, we can see that commercials are able to go net long. They're not there yet, and this was the most bullish COT Extreme situation in the past. So we're not there, but this can easily happen. Now, we have these relative extremes in the market which show you that even smaller extremes could affect the market, which means we may see a bit of a rise in Oats coming in the near or medium term future. So that was all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.